I want to talk about today when to buy Bitcoin. So I see a common theme running online basically. There's a lot of people trying to tell you, what you should do, when you should buy your crypto, and how you should buy your crypto. Particularly when it comes to things like technical analysis. Everybody wants to trade. Everybody wants to know how to trade, and there's always, people are wondering when's Bitcoin going up, when's Bitcoin going down, and you log on to your favorite crypto YouTuber or Google, and you end up at a favorite crypto YouTuber's YouTube channel. And he's looking at some sort of chart, and he's trying to tell you based off his voodoo technical analysis, which, by the way, you have no idea what his track record is. And most people have no idea that track record of technical analysis overall is actually quite horrific. It's just not good. Technical analysis is abused all the time. It's never supposed to be a 100% method to somehow make unlimited riches in the market. It's just one of your tools in your tool bag, so to speak. But the point is, people are always trying to look at when to buy, when to sell. When should I enter the market? Is it going up too much? Is it going up? Is it going too low? And here's what you need to recognize. You need to recognize that you want to do everything you can not to get emotional about your decisions. What I mean by that is, most people, and you can look at marketing, as I tell you this, if you start paying attention, you'll see this. Most people make the mistake, you're supposed to buy low, sell high. The problem is, in order to buy low, you have to buy when everybody else is saying that it's a bad time to buy. That's why the market's low, because everybody says it's bad. But what ends up happening is most people wait until the market's going up and everybody's excited and they're like, oh, you got to buy more because we're afraid it's going to keep going higher. So everybody's talking about buying more, buying more, buying more. And then as they're buying more and they're buying more, at some point the market falls and the people that got in last get screwed. And so what ends up happening for most amateur investors is they end up selling the dips and buying the tops. In other words, they sell when it's low and they end up buying when it's high. And they get basically screwed from both ends, pun intended. And and it's because they're all emotional and they're listening to everybody else. That's another thing. Try to remove your emotions. The second thing is stop listening to everybody else. Most investors, most commentators are wrong most of the time. Most of the time. And this is even by the people who make a ton of money in the market. Most are wrong. If you go look at hedge funds, which are supposed to be run by these super genius wizards of math and investing, you'll see that most of them have horrible track records. So if there's no one to listen to, who should you listen to? Yourself. You're probably as good at being correct as everybody else. So here's what I recommend. I recommend that you research the fundamentals of why you think cryptocurrency should go up. When you hear guys like me make videos, Bitcoin's going to $1 million. Bitcoin's going to, $100,000. Then you want to research, why is it that someone like me would be saying that? What do I believe? And then the question is, do your own research. Don't listen to me or anyone else for that matter. Do your own research. Listen, I'm all about common sense. If you have common sense and you believe in common sense advice, common sense investing, hit that subscribe button, hit that thumbs up, hit that bell notification, because that's where I come from. I believe in simple common sense. Take personal responsibility for your own actions, but learn what you should be doing to be able to take personal responsibility. So research the fundamentals. Where do you believe it's going in the long run? And why do you think it's going to go? And then the question is, how does it fit in your current investment portfolio? Is it your very first investment? Listen, cryptocurrency probably shouldn't be your very first investment. It is a very risky investment. At the very least, you should have a decent savings account of some kind of emergency fund set aside before you start investing in cryptocurrency. That's just common sense. You don't want to be pulling out of your investment as your investment is doing well. So just be mindful of that. Because you need the money, do you know what I mean? The last thing you want to be doing is selling an investment that's going up when you believe that it has the potential to go up a lot more. So then what I recommend is once you know what your beliefs are, then you simply make a decision based off of your own convictions. That's the best way to do it. And that's the best way to make any investment decision, and then own that decision. Now, once you make a decision to start purchasing, the question is, how do you purchase? I recommend that you dollar cost average. And if you don't know what dollar cost averaging is, we'll get to this chart here in a minute. But if you come here, dollar cost averaging is a simple technique that entails investing a fixed amount of money in the same fund or stock at regular intervals over a long period of time. If you have a 401k retirement plan, you're already using this strategy. Now, many of you may not even have a 401k retirement plan. A lot of people who are in crypto are young and they may not even have some sort of an investing plan. Then what I recommend that you do is just dollar cost average in. And you can do that simply by using something like Coinbase. I recently did a video on how to buy Bitcoin, and I actually showed 3 ways to purchase Bitcoin, but then I showed Coinbase as being the best way, spoiler, but then I actually showed how to open an account and how to actually make a crypto purchase or a Bitcoin purchase with Coinbase. Dollar cost averaging, you can set up Coinbase where you can invest $100 a week, $100 a month, $10 a week, $5 a week, $5 a month, $1,000 a week, or $1,000 a month, or $5 every day. You can literally set it up where it buys small amounts. That means no matter what the market's going up, cryptocurrency is going up, you don't care. You see, now that's part of your system about not getting emotional. Because remember, most people make mistakes when they get emotional. So there's only 2 ways to do that. Well, there's one main way. One is to set up a system, but trading, the only options are being able to invest in a way where you can create passive streams of crypto or passive streams of income. That's one way to be unemotional, and that has the advantage of giving you cash flow, but that's not something that everybody can do or everybody understands. And it's even a little bit more advanced than this video. I have other videos about that. If you want to learn more about that, just click down below and subscribe to my Crypto Passive Profit Strategy newsletter. But in either case, whether you're dollar cost averaging or you're buying or purchasing or creating passive streams of crypto, in either case, you're taking the emotions out of the investing or out of your crypto collection or asset accumulation. That's really what it is. It's about stacking up Bitcoin or stacking up other cryptocurrencies because you believe the future is bright and the potential could be enormous. But there's a tremendous amount of risk, which is the number one reason we have to get our emotions out of it. We will see this market crash, 50%, 80%. You'll see it skyrocket. It's already skyrocketed thousands and thousands of percent, tens of thousands of percent. If you look back to people who were first investing 2, 3, 4 years ago. I mean, someone bought, pizzas with 50 Bitcoin that were, I think, 50 cents each or something crazy like that. So understand, could you imagine the guy who did that? So that's why you don't ever want to sell your crypto until you're convinced that you're either going to take some profits, and that I'll do that in a future video. I'll give you a strategy of how you can sell crypto. And it's just really about common sense advice. So if you believe in common sense, hit that subscribe button. And if you believe in the future of cryptocurrency, be sure to subscribe. Thank you so much for watching, but here's what I want you to know before I get out of here. Be very careful what you hear online. Be very careful listening to somebody else. Even the best intended people, even me on this channel, none of us actually have a crystal ball. None of us know the future. We can give our best educated guess, but then the problem is we all have investors biased. Once you make a decision to purchase something, you psychologically will always tend to believe that news is going to be positive until you make up your mind. You've crossed a major emotional hurdle where you say, you know what, I was wrong and I lost, and you accept defeat. But there is something called investor bias, and it is real. So you have to have your own convictions and then get unemotional. Create a system. Dollar cost average in. More advanced technique is being able to create passive streams of cryptocurrency. Thank you so much for watching. Stay tuned for more. I've got a lot more coming up. I'm going to be putting out an email this week for my crypto passive profit strategy newsletter on the 3 best income streams, or crypto streams really, for cryptocurrency, in my opinion. The ones that have the most potential, the ones that are going to last the longest, be the most stable, and 2 of them allow you to literally collect cryptocurrency. So, collect Bitcoin. So stay tuned for that. Thank you so much for watching.